Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to explain the difference between the two OTC tickers of BYD. The first ticker is BYDDF and the second one BYDDY. I have seen countless people asking the same question, so I just wanted to share this video so I don't have to answer every single question. BYD is currently not listed on a public exchange in the US like the Nasdaq or New York Stock Exchange, but is trading over the counter, also called OTC. Companies that are listed on exchanges are called listed stocks, and companies that are trading OTC are called unlisted stocks. So what does over the counter mean? Over-the-counter trading is providing smaller companies that are not fulfilling the listing requirements of major exchanges or don't want to pay the listing fees, and international companies still a way to sell their stock to the US public. Securities that are traded over the counter are traded via a broker-dealer network as opposed to on a centralized exchange. Transactions are managed by the OTC Market Group's platforms. OTC Market Group is the company that runs the platforms and provides price and liquidity information. Now let's get closer to answer our question what the difference between BYDDF and BYDDY really is. All companies traded over the counter have either 4 or 5 letters. All common or capital stocks have 4 letters, while the 5th letter means it is something else than that. If the last letter is an F, it means that it is a foreign security that you can buy in US dollars rather than in the foreign local currency on the foreign exchange. Because there is a demand for the stock or security in the US brokers create a ticker for it and continuously price F shares in accordance with local market share price movements and available liquidity. While trades are executed in US dollars by US broker-dealers, the shares are settled, cleared and custodized in the local market, so trading an F share is similar to trading a US security. US investors that purchase the F share also appear on the company's shareholder list based on the local disclosure requirements in the same manner as an investor that purchases shares in the home market. If the last letter is a Y, the security is an American Depository Receipt, also called ADR. ADRs are negotiable securities issued by a bank that represent shares in the non-US company. These can trade in the US both on national exchanges and in the over-the-counter market. Are listed in US dollars and generally represent the number of foreign shares to one ADR. This gives US investors exposure to foreign equities without having to trade on a local exchange in the local currency. Investors can trade ADRs during the US market session. ADRs can be issued as unsponsored without any involvement or approval by the foreign company, or they can be issued as sponsored where the underlying foreign company participates in the issuance of the ADR and also retains a controlling relationship. Only sponsored ADRs may be listed on a national exchange and they must meet certain qualifications, otherwise they trade in the OTC market. Unsponsored ADRs only trade in the US OTC market. To decide whether you should buy the F shares or the ADRs of the company, you have to know the risks and benefits of the ADRs. The benefit is that the issuing financial institutions are collecting the dividends and distributing them to ADR shareholders. Most of the time, they have higher liquidity than the F shares, which makes it easier to buy and sell the security. ADRs are way cheaper to trade than F shares, which makes sense if you trade a lot or just buy a small sum. On the other hand, the biggest risk of ADRs are that they can be terminated if, for example, there is not enough demand or interest or the underlying company has some sort of reorganization. In this case, the ADRs can be liquidated or converted to the ordinary foreign shares. Furthermore, the banks are taking a small cut when they distribute the dividends and also a fee for the custody that are levied on a regular basis, mostly annually or quarterly. So, if you want to invest with a large amount of money, I would buy the foreign F shares BYDDF, but if I only invest a small amount or trade, I would buy the ADRs ticker BYDDY. Now, if you have asked yourself why BYD is not trading like NIO on the Nasdaq Stock Exchange, It is because BYD's ADRs are unsponsored while NIO's ADRs are sponsored. If this video helped you out, I would really appreciate if you could just press the like button and comment to support the channel for the YouTube algorithm. Bye guys, and see you in the next one.